Hello, and welcome to the USDA's Basic Training on Loss Claims Collecting on the Guarantee. This module is designed to improve your understanding of the requirements outlined in Chapter 19 of the Handbook 13555. All loss claims are filed electronically and input into USDA Link. Once the input process is complete, the servicer must upload the documents. The loss confirmation page must be uploaded first. This is a document type 11056. This document will create a task on the system, letting the servicing office know the loss claim is waiting for review and processing. One note on loss claim coverage. The 100% of any loss equal to or less than 35% of the original loan amount plus 85% of any remaining loss up to 65% of the original loan amount is not something the servicer will have to calculate. This is a system calculation and can be found under the computed loss information of the actual loss claim in Link. Let's discuss the different types of loss claims. When settling by acquisition with a deed in lieu, the loss claim is paid based on an estimated sale price that is calculated using a standard acquisition and management resale factor of 15.95% and a market value appraisal. All of the appraisals submitted with this claim type are reviewed by our in-house appraisers. There are a few common reasons that appraisals have to be sent back for corrections. 1, not an as-is market value appraisal, meaning the appraisal received is for a liquidation value, which would be a severely limited marketing time frame. We do need a full interior as-is market value appraisal to settle the loss claim. 2, USDA is not named as the intended user on the appraisal. The USDA must be the intended client on the appraisal. And 3, the intended use is not for asset valuation for a loss claim. It is a requirement that the appraisal be for an as-is market value asset valuation. The USDA individual state-based bidding chart is published on the USDA Training and Resource Library Loan Servicing tab under the Documentation and Resources section. A servicer should bid the state-specified percentage listed on the chart. The bid is the specified percent of the appraisal obtained prior to the foreclosure sale. If the property is occupied, an exterior appraisal is acceptable for bidding. If the property is vacant, a full interior appraisal should be obtained and used for bidding. All servicers are delegated to approve a short sale without agency approval as long as it is being approved according to the guidelines listed in Chapter 18 of our Technical Handbook 13555. The short sale will be reviewed for compliancy at the time of the loss claim review. The loss claim must be filed within 45 days of the short sale closing. All valueless liens require agency approval and are reviewed on a case-by-case basis. If the home is a total loss and has insurance proceeds, it is not necessarily a valueless lien. There is some value and proceeds available to give it value again. Typically, valueless liens are homes that cannot be occupied again. They are truly valueless, meaning the property has some sort of contamination and is not habitable. It is the servicer's responsibility to have documentation to support why it is believed the property is without value. Some states offer the right to redeem a property after the foreclosure sale. We refer to those states as redemption states. In a redemption state, the borrower has a specified amount to redeem the property after the foreclosure sale has taken place. The redemption is state-specific. Some states require the borrower to redeem the property for a state-specified amount. Some require the borrower to pay the foreclosure bid. The redemption period is also state-specific. In some states, it's a set period of 5 weeks or 30 days. In other states, it's as long as 6 months to a year. A redeemed property is a property that the borrower has paid the set redemption amount and has taken ownership back after the foreclosure sale. On this claim type, the loss claim will take the redeemed amount paid by the borrower, so the loss claim is calculated on the dollar amount of the redemption. During the state-specified redemption period, the borrower does technically still own the home. They can sell the property. If they sell the property for less than what is owed, that is considered a short sale during the redemption period. This loss claim will be based on the amount the borrower sold the property for, as the money still has to go to the servicer since the debt is not paid in full. Expense reimbursement on lost claims begins with the due date of the last paid installment, DDLPI. The claim type determines the end date of expense reimbursement. The attachments utilized for documenting these costs are no longer located in Chapter 18 of Handbook 13555. Access is provided through GLS, and guidance is now available on the Link Training and Resource Library page under the Loan Servicing tab. Some of the penalties on lost claims are system generated. This means at the time the lost claim is input, the system is reviewing certain dates and automatically assessing a penalty. For instance, first contact date after missed payment and first inspection date after missed payment. There are other penalties that may be manually assessed by the analyst reviewing the claim based on findings. A lost claim can be reduced or denied if the loan isn't properly serviced. A lost claim can be reduced if the FCL timeframe was not adhered to, disallowed days. Additional interest days can be changed to 0 if the lost claim was not filed timely and accurately. The document upload process for supplemental claims is similar to the initial lost claim document upload process. The servicer must upload a document type 11039 additional loss through the USDA link webpage. This can be done through the lost claim confirmation page on the lost claim admin screen in Link. The supplemental loss claim should include a Word document simply stating what is being requested and all supporting documentation for this request. Again, the document 11039 must be uploaded first in order for the agency to have a task for review. The informal review process to dispute a decision made on a lost claim. Typical informal reviews are expected to be made within 15 days from the date of the lost claim payment. Any request made beyond the 15 days will still be reviewed. It will be reviewed as a supplemental claim and not an informal review. These requests are made by email through the address displayed on this slide. The agency puts out important information, notices, and changes via the GovDelivery notification system. To subscribe and begin receiving those updates, as well as view previous releases, please visit the Link Training and Resource Library page. The Guaranteed Servicing Contact Information Sheet can be found on the Link Training and Resource Library page in the Loan Servicing section under the Lost Claim Administration and Servicing section. This sheet has contacts for the USDA's National Office and Servicing Office. All of the additional resources noted here, including contacts for further assistance, can be found in the Loan Servicing section of the Link Training and Resource Library page. Thank you for reviewing our training on lost claim servicing.